Hello, everybody. Good to see everybody. It's been a good day. Whoop. I forgot the video's live. We had a rebound. We had some good Fed news. We kind of knew it was going to come that way, so it's all turned out good. But here we are. We're going to talk about Polygon and exit strategy. Should we exit? Where is it going from here? But we're also going to do a quick refresher because there's a lot to catch up on since my last Should I Buy video. At this rate, when I do Should I Buy videos, about 60% of them are yes, 40% are no. And so here we are. But thank you all for being here. Thank you to the moderators. And let's jump in and go through this. So first of all, you guys know the drill, math, money, freedom. And this is not financial advice. So first of all, our community had a resounding vote for Polygon, probably because I have been banging the table on this thing since early summer or even before that. From our analysis, we knew that this was a top 3 smart contract platform. Ethereum, Solana, Polygon, all day long. And people were frustrated for a long time. It's like, it hasn't moved. It hasn't moved. I said, wait. There's just so much value there. Now the world is waking up to the value. So from over 7,000 votes, I think, can't remember how many Matic had, about 2,200. So it was very popular for the next in the series. And we'll talk more about what comes after that. But a quick reminder as to what it does. It is designed to scale Ethereum. We know Ethereum has some scaling problems. It uses proof-of-stake sidechains. And it has a capacity of millions of TPS. We'll talk a bit more about speed later. And it's designed to be Ethereum's Internet of Blockchains. And we'll talk about how as well some other chains are coming over that were ETH-based, now moving to Polygon, things like Uniswap, things like OpenSea, and a whole bunch of others. So a quick reminder, for those who aren't familiar, layer 2s are on top of layer 1s. Layer 1s are like Ethereum, and layer 2s help them scale. We could go into detail about this, but basically it helps them get faster and solve a lot of the problems that Ethereum has right now. And reading the tea leaves with what Vitalik Buterin's been saying lately is, I don't know if ETH 2.0 is really going to solve all these problems, because he's been talking a lot about ZK rollups and why they're important. We'll talk about those as well in a minute. So how it plays, the easy way to think about it without getting too deep is if Ethereum is your bank account, Polygon is your Venmo or your Cash App. So you can transfer things online free and at low cost or zero cost. And that's from Sandeep Nawal, the co-founder of Polygon. And I really like that analogy, very simple to get our heads around. As I mentioned before, the IA Scorecard Ranking from both the Crypto Compendium and the SCP Profiler and the Composite Score, boom, this one was always number 3. So we're happy for everybody in the community that got some. Now let's talk about the Scorecard Ranking today, where they stand. You can see that Polygon is a beast. It's ranked number 14 right now. It's bigger than Algorand and Chainlink. Once, I think, coins like Dogecoin get out of the way, this could very easily be a top 10 crypto. Extremely bullish on the project still. Now, I did mention the fact that Polygon MATIC is going multi-chain, and Uniswap is another one that's going to move over to Polygon because Uniswap has been suffering due to gas fees, and they made an overwhelming vote to move to Polygon. So it's not the only one that's actually moving over. So watch this space carefully. Now, let's talk about ZK rollups, because this is very, very important as well to the future of Ethereum and scaling. And this is a bit of a long one, but I'll read it because there's so much that we had to pack in here. So ZK rollups are layer 2 solutions that bundle hundreds of transactions off-chain. Very important. And then they are verified instantly in the main chain, resulting in a faster finality time, which is critical. Now, there was an acquisition of Mir, and Matic hopes not only to improve the ZK rollups compatible with ETH, but also create ones that work with the EVM, the Ethereum Virtual Machine. And ZK scaling represents the future of Ethereum, but scalable EVM compatible ZK rollups don't exist yet. That's very, very important. And the missing piece is efficient recursive proofs. I wanted to make sure I got all that right, so I wrote it all down in summary format for you all. It's not there yet, but Matic have spent nearly $1 billion on acquisitions to solve this problem and this issue. No other chain has spent as much. And this is a real thing. So 2 of the acquisitions they made, first one was Hermez. And then they recently, just a few days ago, bought Mir Protocol for 400 million to expand their Ethereum capacity. Now, to zoom out for a second, ZK rollups clearly are a thing. The whole world is talking about them. 2022 will all be about ZK rollups. And think of Ethereum, again, being the bank, and what's layered on top, solving all the problems. Mir Protocol's founders are joining the Polygon team. They're going to be rebranded as Polygon Zero. Z for ZK, zero proofs, etc., zero knowledge. And everybody realizes that this whole space is critical. Also, Polygon previously bought that ZK rollup company called Hermez Network for 250 million. So in total, it's over 2/3 of $1 billion, which is substantial. And they believe the combination of these are going to fix everything. So let's look at what this looks like. Now, in terms of ZK rollups, there's a lot out there. You guys know some of the names. We'll bring in others. But here, this is the tour de force that Matic is bringing to the table of how they believe they can really solve Ethereum scalability problems across Polygon Zero, which we just mentioned, Mir, Polygon Proof of Stake, Aztec, Polygon Avail, Starkware, Optimism, Arbitrum, Polygon Maiden, Polygon Hermez, and Polygon Nightfall. Again, they are putting a lot of effort and a lot of emphasis on this. And also the combination of this entire stack will basically help them onboard what they believe to be the first billion users to Ethereum from their network. Now, when we look about the ecosystem that they have, it is also massive, growing. They have plays across all the areas that you could imagine. Everything from gaming, wallets, NFT plays, DeFi, infrastructure, Oracle. They're also working a lot on the enterprise side of the house too, with big companies like Tata and other organizations, Wipro, Infosys, I think, as well. So a ton of activity going on in the ecosystem. Now, for those who care about energy, I thought this was an interesting little slide here to show you exactly how much energy is used by some of the top chains. And you can see that Polygon uses 1/4 of the energy of Solana, but they also have a lot less transactions. But we'll see, monitor the energy as they go forward because they do use some energy. Now, in terms of speed, this is something I tweeted a week or 2 ago about the relative speed and the transactions per second of Matic, Avalanche, Ethereum, Arbitrum, etc. And you can see nobody comes close to the TPS of 44.73. That's versus, I think Ethereum do about 3 or 4 right now per second. Max recorded transactions per second is nearly 700, and theoretical max is 7,200. So this puts it on the scale of really helping Ethereum compete with the likes of Solana and other fast chains going forward, which is very important. So there is also a lot of excitement around the news of EIP 1559 Polygon version, the Polygon flavor. And people are very excited. Oh, it's going to burn a truckload. But just to share some true numbers here, the current inflation rate, and you guys know I hate inflation, but Polygon inflation is not too bad when you compare it to other chains. It's about 13.35%. The new burn under their Matic EIP 1559 proposal will burn about 0.27 of the total Matic supply per year. So it's very small. So that 13% inflation will go to, or 13.35 will go to about 13.08 whatever percent as they go forward. So not that big a deal. Now, in terms of TVL, a very important metric to look at as well. Here you see exactly how big Polygon is compared to some of the other chains. Basically the sandwich between Tron and Fantom, and growing very fast. Growing at the TVL over the last day grew by 6%, which is large. And the total TVL is about 5 billion, half of the amount of Solana and nearly 1/3 of what Terra have as well as they go forward. Of course, Ethereum is huge. TVL is 164 billion, but that's shrinking every day. The dominance, the TVL dominance for Ethereum has shrunk a lot over the past 6 months. So currently ranked number 7, but we watch that very carefully as well. Now for the favorite part, price predictions. Let's look at, first of all, the analyst price predictions for Matic, which were very bullish when I did my original Should I Buy video. A link up there on the top. You can see all this data and all the detail behind Polygon. But 6 analysts, they range from $5 for 2021 to $30 in 2032. So very substantial. As you can see, all of these analysts, missed their target this year. Capital.com is the closest at $3.05. Now let's compare this to my price prediction model. Here I have updated the model. I took into account some of my new Ethereum price prediction models. I took into account the new EIP 1559 burn, and I took into account the new ZK features and acquisitions that could help. So basically from this, my new price predictions for 2022, my bear case, which is the low, to my expected case, which is the $4.61 for next year, to my high case of $6.31. These are going to be critical for us to determine our exit plan. As you know, the 2023 could be a slow year if things happen, if we go to sort of a bear market, but that's where we are. Now, according to this model as well, this could be worth, bear case in 2030, $15, bull case, $32 a token, which is substantial. Now let's bring that into what I like to do is identify the exit levels for our strategy as we go forward. So here we were bouncing very heavily on the 0.382 Fibonacci support level, which I covered in a couple of videos on my TA Tuesdays. And I spoke about MATIC yesterday as well. So that level bounced real nice today. In fact, looking at the real-time chart for MATIC as we speak, we can see MATIC is currently trading at about $2.14. And it's hard to believe it was $1.70 just yesterday. That's a big move. But per my levels, I've got 5 exit levels. Now, I want to talk about these and how they were chosen. Obviously, they are a function of price prediction models and Fibonacci levels and a hybrid. Also, the first level at 274 is only 20% away from where we are right now. So it's close and it could reach. But the idea is to take some initial profit off the table to cover the cost basis. And as you guys know, I've been buying MATIC since 40 cents, 86 cents, $1.04, $1.20, and just layering into it all the time because we always felt very bullish on the project, on the chain. The second level is at 328. Third level is 356. Fourth level is 383. And then there's a big gap up to the fifth level. And there's a method to the madness for that as well, because I want you all to think about this structure and this methodology to build out your own exit models. Now, when we look at the actual exit model itself, here it is. Now, I built this based on my average cost basis, which is about 80 cents, 82 cents, and my risk tolerance and my price prediction, my super bull case for next year. So I want you all to think, as what is your cost basis? If your cost basis is $2, it looks very different to comparing your cost basis to being 20 cents. So please factor that in and also choose your levels based on that as well. But per this model, you can see, and I took a simple fifth of holdings, the 20% each time. And at the first sale, we sell 200 tokens at a cost of about $2.73. Which will take in nearly $600, which will almost cover the actual cost basis, not all. And then we go on from there. Next, we sell another 200, and this is assuming we have 1,000 tokens. So adjust that to whatever you have, 10,000, 100,000, 100, whatever, and modify it accordingly. The second layer, we sell at 328, 20 tokens. Third layer, 356. Fourth layer, 383. And the fifth layer, way out there, 466. Now, I'm not expecting us to hit that at all, by no stretch, because I also want to hold on to some of my MATIC long term and then layer into it again. So imagine we start selling as we go up, taking some profits off the table, and on dips, we'll be buying back in as well. So it is a very volatile beast. As I said, it was $1.70 yesterday. It's $2.15 today, and that's a big move. So imagine you could even sell at $2.15 and hope for another dip back as we go forward. So in conclusion, everybody, there's always a conclusion. MATIC is in our top 3 smart contract platforms, and it may be worth keeping long term. That being said, selling into strength, buying back on volatile dips may be a solid strategy, not financial advice. And Ethereum needs ZK rollups, and we feel MATIC is a clear leader. It's a clear leader in adoption, in dApps, in DEXs, in TVL, in its space. Nobody else comes close. Speed, etc., etc. It is absolutely out there. There have been some stories of some Polygon MATIC gaming platforms that were hacked, but that's nothing to do with Polygon. That was a separate issue. Somebody stole somebody's keys. So with that, everybody, remember, build your own strategy. Use this as a framework to identify how to take some profits off the table. And most importantly, as we said last time, I love this one. I got to repeat it because I used it for my VeChain one last week. I made my money by selling too soon. Burnout Baruch. You don't want to be the last one holding the bag in this game. So hold tight, everybody. And drop a comment below as well for which other ones you'd like to look at. I'm thinking about doing Cardano next, Chainlink, Polkadot, and a few others. So let me know if any of those resonate with you as well. Okay, so with that, big thank you to the moderators for keeping us all safe. And smash the like if you like the content. That's a wrap. Thanks, everybody.